Most traders don't wipe out their accounts because their strategy is broken. It usually happens while they're doing everything right. Let's look at where things actually start to slip. You've probably seen this pattern play out. A small account starts gaining momentum. $200 turns into $800. $500 climbs to $2,500. It feels controlled, repeatable, like something is finally clicking. And then, it fades away. Not all at once, but slowly over a series of trades. Here, what makes it confusing? They didn't suddenly go off track. They didn't start gambling. They stuck to their system. So what went wrong? There's one rule that sits right at the center of this. You've heard it before. Always aim for a 1 to 3 risk reward. On paper, it's solid, mathematically sound. But trading isn't lived on paper. Numbers don't feel pressure. You do. And that difference shows up in ways most people don't expect. Let's simplify this. 2 traders, same account size, same level of experience. Only one thing separates them. Sarah and Mike. Sarah risks $100 to make $100. Nothing aggressive, nothing extreme. Her win rate sits around 55%. Mike risks $100 to make $300. He's following the rule. His win rate is closer to 35%. If you run the numbers, they're both profitable. Same edge, same potential outcome. But something feels very different when you actually trade it. Sarah takes a loss, then another, maybe a third. It's not comfortable, but it's manageable. Then she gets a win. Not huge, but enough. It interrupts the streak. It resets the tone. Mike's experience unfolds differently. First trade, loss. Second, loss. Still within expectations. Third, fourth. Now it starts to feel heavier. By the 5th loss, something subtle shifts. Nothing external has changed. The setups still look valid. The system hasn't failed. But internally, there's a slight hesitation. A fraction of a second before entering. A quiet thought that wasn't there before. Is this really going to work this time? He still takes the trade. Another loss. And now the chart doesn't feel neutral anymore. Every movement seems more significant. Every tick feels like it's testing him. He's no longer just executing a setup. He's reacting to a sequence. Sarah, in the same market conditions, doesn't feel that same buildup. Not because she's better, but because her wins arrive sooner. Not bigger, just closer together. And that spacing matters more than people realize. Because pressure doesn't just come from losing. It comes from how long you stay in that losing state. If you step back and look at their equity curves, Sarah's moves in waves. Up, down, up. There's a rhythm to it. It feels alive but balanced. Mike's curve tells a different story. Drop, drop, drop. Then one sharp rise. Relief. Then it repeats. If you're honest with yourself, what sticks in your memory more? One strong win, or a string of losses? That sequence lingers. It doesn't just disappear when the trade closes. It leaves behind small adjustments. A slightly tighter stop. A quicker exit. A skipped setup that would have fit perfectly before. And without noticing it, you've drifted away from your system. Now you're trading your responses, not your edge. Put Mike into a prop firm challenge. Now there's a drawdown limit, a line that can't be crossed. He hits a losing streak. 6 trades. 7. He's still within the rules. but close enough that every new position feels heavier. Now the next trade carries more than just probability. It carries consequence. It starts to feel like it has to work. And that's where things begin to distort. Because the moment a trade needs to win, it's no longer just a trade. Execution tightens. Decision-making narrows. The focus shifts from process to outcome. Sarah runs into losing streaks too. That part doesn't disappear, but the spacing between her wins gives her room. Room to stay neutral. Room to keep showing up the same way. There's less urgency building beneath the surface. And that difference compounds quietly. The goal in trading isn't just profitability. It's consistency in how you show up. Trade after trade. Situation after situation. Because the market is already uncertain. If your internal state keeps shifting too, you don't have anything stable to rely on. And then there's a moment. It's easy to miss. Right before Mike clicks to enter a trade, something is there. Not a clear thought. More like a sensation. A slight tightening. A resistance to being wrong again. It's subtle, but it's new. And it doesn't come from the chart in front of him. It's built from everything that came before it. From the spacing of his outcomes. From how long he has to sit in losses before relief shows up. The structure of the system is shaping his experience, not just his results. Every strategy creates an environment, not just in terms of numbers, but in how it feels to operate inside it. And that feeling feeds back into behavior. Quietly, gradually, until the way you trade starts to shift. So the real question is, does a 1 to 3 risk-reward work? It clearly can. The better question is, what does this feel like while I'm trading it? Because that answer determines more than your edge. It determines whether you can stay consistent long enough for that edge to actually play out. Near the end of another session, Mike sits there watching price move. A setup forms. Clean, familiar. Exactly what he's been waiting for. But there, that pause again. Slightly longer this time. He notices it. Just for a second. The hesitation. The urge for this one to be the one that turns things around. The quiet need for it to work. He enters anyway. But something about that moment lingers. Not the outcome. Just that shift. And it's small. Almost nothing. But it's there. And that's where everything starts to change.